The great experiment is on. Happy Tuesday, friends. Welcome. This is it. This is the place. We fire truth missiles up in here. All right, let's go ahead and shut this music off. I am traveling today, so my game here on video is going to be questionable. It's going to be a little bit embarrassing here for a second. Let's do this. Boom, boom. Okay. So, number of things going on. This is a very humbling market, by the way. A lot of people being humbled right now. And as I said, weeks ago, the people who are really getting hit the hardest are the people who are in the mortgage and real estate industries. That's who's feeling it the most, because purchase transactions, 2020 versus 2022. By the way, if you aren't signed up for Brian DeVore's Monday Market Moment, go look that up on YouTube. I'll put a link below. Subscribe to that. He provides every Monday great stats that help sort of, give us a feel for what's going on. So we got purchase volume. So number of units down 2020. So 2 years ago, year over year for the month of July, 50% less transactions happening in San Diego. That's big. That hurts everybody. That hurts title. That hurts escrow. That hurts mortgage. That hurts everybody. Then you've got refinances are down like 90%. So, a lot of people really feeling it right now, myself included. I've never had this few of loans that I'm working on at any one time. And so, it's humbling for people who didn't see it coming, people who were living too large, people who, maybe just thought it would never end, or have never been through the cycles in this industry. I came on here and said in February, guys, you should stack some chips. You need to go south with a little, okay? You need to take a little to the bank, because it's very likely that the never-ending business, never-ending phone calls is going to come to an end. It just has to, as rates increase, and that's exactly what's happened. So now that rates have come down, we can see just how sensitive the market is to rates, and that was a really good indicator for us. I'm going to show you some stuff today. We're going to look at mortgage rates right now. I'm going to show you a few different articles. We're going to discuss a couple things: inflation, mortgage rates. In my opinion, this is it. This is the main thing to be watching, the main thing we've been focusing, the main thing we've been tracking: mortgage rates, which are keying off of inflation in a significant way here. Hopefully you can hear me. I have no idea why I'm live. I can't really switch back over and do comments though, because when I do, it does the infinite screen thing. I only have one screen. I do not have a good setup. You can see where I am right now. This is not ideal, but the information remains solid. All right. So here we go. This is the line that needs to hold. It's getting a little messy here. We're closing right here today, down 30 basis points on the day, right? Yeah, down 30. So, not ideal, but yet still in the channel. Guys, this is our English channel right here. We need to hold this. The second line was not good, but that's basically what needs to hold. And it looks like it is rounding off here at the bottom to make another leg higher. I could be wrong about that, but there are a number of things that point to, as I've been telling you now for over a month, about 5-6 weeks straight now, that we may have seen, my opinion, we've seen the worst of inflation. We've seen the worst numbers, the ugliest numbers we're going to see. That doesn't mean it won't persist for a while. That doesn't mean the numbers won't still be bad for a while. But the worst one, the top, that's gone, which means we're now on the other side of the inflation train, which should be good for bonds, although it's not looking like it today. There's a lot of variables too. A lot of companies haven't reported since things have sort of turned for the worse. So we're starting to see some reports come in very mixed. This company did great. They beat. This company got killed. And you're seeing a lot of those things going on right now. And that's a variable that's very difficult to account for. Very, very difficult to account for. So I want to just stay focused here on interest rates. Where are mortgage rates? FHA, VA, you're still seeing some of the low fours, middle fours. I quoted another conventional today at 4.99%. There's still really good rates out there. I'd say that's probably not normal. Average low fives, for conventional. The jumbos are out there still in the low fours for the 7-year ARM. So rates aren't bad, but we've seen for sure the uptick in activity that has taken place in San Diego was directly correlated to that drop in rates. Now, at the same time, we had the Federal Reserve saying that rates had gone up. So it was muted a little bit by that. And I think the transmutation of that across the nation is one of the reasons why we haven't seen as much of a bounce back, because you should at least get a dead cat off of a scenario like this, should at least see a dead cat bounce. We really haven't seen that yet. So in my opinion, there's still a lot of pent-up demand ready to be released into the marketplace. Here's a good article. I want you to check this out. Patty Dom, I don't have an opinion on her. Just don't. Not going to go there. Critical inflation report could show price increases have eased. Saw the tweet from Elon, which I shared on Facebook, where he said, hey, all the stuff that, Tesla buys seems to be going down in price. So maybe we've seen the worst of inflation. Maybe that is it. And I thought that was big. July's CPI is expected to show that inflation is coming off its peak and price gains may slow in coming months. That would be perceived as good news in the markets. Falling gasoline prices are a big factor behind forecasts for lower July CPI, which is expected to dip to a headline pace of 8.7%, which is down from 9.1 in June, and 9.1 could be the worst of it. We'll find out. Bonds are not really giving us that sort of warm and fuzzy right yet. And that's why I think there's room for upside there. I think we will see bond prices go higher. Just a quick reiteration here or re-explanation. When bond prices go up like this, mortgage rates go down. And when bond prices go down like this, mortgage rates are going up. So here in the last, call it business week, we have seen rates go up a little bit. It hasn't been too bad though. But you are seeing a lot of interesting things. Today, Loan Depot exiting wholesale. They're exiting the wholesale marketplace. We've seen, we've seen a couple closures in the wholesale space, mostly non-QM. Loan Depot is getting out. Why is Loan Depot getting out of the wholesale business? It seemed like something they should do well at, something that should be profitable for them. The problem is United Wholesale Mortgage and Quicken just sort of dominate the space so well from an operational and a rate standpoint. They're so efficient. They're so good. No one can really compete with them. So in times like this, UWM drops their rates 50 basis points and they just smoke everybody on rates, and they have the best process, and they're a no-brainer option for brokers. So it's not too surprising, and I don't think it's really a sign of anything being wrong with Loan Depot. I don't think it's anything to do with the market, just a matter of that there's a lot less transactions, as we discussed at the beginning of this video. There's a lot less transactions out there happening from a purchase and refi standpoint. So you have to cut something. If you're a mortgage operations, you have to cut something. Imagine being someone who owned a mortgage company and wanted to sell, but didn't 2 years ago. Yeah, think about that. Humbling market right now. Very humbling. A lot of people, I've talked to a lot of people, hustlers, who are like, I have nothing. And that is the scariest thing for someone who's on commission, who is a commission-only individual. You look at your pipeline, you look at your activities. To have nothing is a really big, heart-sinking type thing. So I think it will turn. Keep working hard, people. Keep working hard. Just keep working hard. Do the right things. Take care of people. Provide value. Do what you can to help enrich your lives. That's really the best thing you can do right now if you're in the industry. So this one's interesting. You can read more about this. There's actually a video too, I think, in here for this one. But essentially, the same thing I've been telling you for a month and a half is very likely to come true. I've got a winning streak here. This isn't a victory lap. Maybe it is. But I've been right a lot. However, people continue to challenge me, which is great. I love that. I love when people challenge me online, especially if they have something, reasonable to say. But most people, it's just a gut feeling. I think this will happen. I think that'll happen. Tell me why. Tell me why. Tell me why. Give me a good reason. It's okay to trust your gut. It's okay to have a gut feeling. I think you need to look more specifically to anchor yourself in the reality of data, and then put your opinion on it instead of putting out an opinion and then trying to layer data from the outside world into it. I just don't think that's a good way to make predictions about the market. Redfin News, by the way, is a killer place to get information about real estate. And I've just recently started diving in. I've always looked at their charts, and that they have this crazy stuff in this data center here where you can pull up all kinds of stuff. I mean, crazy stuff, all kinds of things. Really, really interesting stuff. But there's also sort of like a blog area where you can get news about real estate. Growing share of home listings are stale as market cools. So stale listings are a problem. We see them in San Diego. In fact, I have a buyer who put an offer today on a listing that's been on the market for over 200 days in San Diego. And it's not a multi-million-dollar price point. It is sub 500. And it's in North Park. I mean, some weird stuff going on. That's almost 7 months. I really hope she gets it. I really do. We're going to have to do a spot FHA approval on that one, but that's no big deal. So starting to see more and more of this, talking to listing agents who are saying the same thing. Hey, I've got 4 or 5 listings. They're all been on the market for more than 30 days. There's a lot of price strategy going on right now. There's definitely a lot of difficult conversations happening with home sellers. Sellers are countering people still kind of crazy. You have to realize if you have no offers on your home and you get an offer finally, and it's way below what you would like to see at this moment, right now, that's what your home is worth. It is. It's what it is. Now, in a fast market where there's lots of offers, maybe the first offer you get isn't the best. In a market like this, it very well could be. You want to take a hard look at that first offer you get and trust your realtor. God, please. If you don't trust them, hire someone else that you trust. You got to trust them. You got to listen to them. The share of U.S. homes that were listed for 30 days or longer without going under contract increased 12% in July from a year earlier. So homes on the market for more than 30 days. I don't think a listing is stale after 30 days in most markets. Maybe you could say so in San Diego. I think in most markets you really need to say 60 days. But I put it another way, roughly 2/3 of the for sale homes were on the market for at least 30 days, up 54% from a year earlier. So homes staying on the market longer. Okay, starting to see it as a percentage. You can see here the percentages, and I'll put this link in there so you can check this out. So there's definitely more inventory for buyers. Some of these buyers, though, are getting like drunk with power, the same way that the listing agent or the sellers have been for the last 2 years. It's flip flopped, and the vengeance is here. The payback is now. And I don't think it'll last long, but enjoy it while you can, home buyers. Enjoy this opportunity to go in and negotiate and get closing costs and, be the only offer on a listing. I mean, what a position of strength that is. You're the only offer on a listing. I gave you a tour of how to sort of track homes here on Redfin, because if you want to look and search and find, your real estate agent can do this for you as well, maybe even more efficiently when it comes to looking for homes that have a price reduction or that have, been on the market for X number of days. A little bit easier to have your agent probably search that stuff. But you could pull that data in and you can say, hey, these are the people who want to sell and do not have a buyer. And they've been sitting around for weeks waiting for one. That's a really good position to be in. A buddy of mine who flips stuff, he flips cars and boats and all sorts of things like that. He said his goal as a buyer is always to just find a motivated seller. So I just want a motivated seller. I want someone who's like, hey, bring me cash and let's get this done today. And as a buyer right now, this is as close as we've gotten to that in real estate in San Diego for buyers for years. So it is, I would say, I'm going to officially call this a buyer's market, officially. Even though inventory is still really low, we have a situation where there are a lot of buyers sitting out, and the market isn't moving super fast. Okay, so here's what I was going to. This is just confluence for what I was saying earlier. Mortgage rates really are what's driving the ship. We expect that the inflation numbers will ease. Okay, I'm fully expecting that. I know I've been saying that for a long time. What, a month now? Expect the inflation to ease, which should be good for bonds. Bonds in a position right here, even though we're close to the trend line, we can't lose this trend line here. We can't. I mean, not that it would automatically be terrible, but we really want to hold this together. We want this to be a sustained, slow move. We've got a nice, slow, upward moving channel here, and that's good, but we want to hold on to that. What we don't want to have is a slow, upward moving channel fail. So you want to say, well, what would be the worst thing that could happen to the real estate market? What would be the thing that would make you get bearish, Derrick? What would make me get bearish would be if we had massive job losses, if we had, something geopolitical happen that was significant, that caused massive widespread fear. If we had mortgage rates went up, let's say inflation eased off in July, but then in August it picks back up and makes a new high, something like that, that would kill mortgage rates, crush mortgage bonds, and that would put us in a bad situation. I think all those things are pretty unlikely, though. I really do. I think all those things are pretty unlikely. If you think about what's gone on so far in every single one of those realms, things have been about as bad as they get. About, of course, they could get worse, but pretty bad. So I feel like all that is pretty priced in here and putting us in a good position to make a run higher in bonds and see lower mortgage rates, which is keying everything. And there's actually a bunch of articles about this today. I just like this one the best, about how we're seeing the reaction to mortgage rates is really what's driving buyers. So the buyers that at least are out there right now, they're very rate sensitive. And here's a pro tip. So one of the main reasons I decided to become a broker is to help my clients get the best interest rate. I'm going to give you a very, very real example. Today, someone called me and said, hey, I have a buyer that's pre-approved from this bank over here, but they're saying the rate should be 5.625, and that's with a point. This is for FHA. I was at 4.375 with no points. That's over 1% plus no points, which is thousands of dollars. So buyers are very much rate sensitive. A lower rate really does motivate buyers, obviously. But if you're a realtor, if you're someone who's referring people to mortgage specialists like myself, you have to keep that in mind. You don't want to be sending people to places where they're going to get higher rates because it may discourage them overall. So not only do they not get a house and you don't get a commission, but now the overall market suffers. Buyers are rate sensitive. They always will be. They should be. It makes sense. And I want to make sure that everybody knows, the reason I'm set up the way I am, the reason why we do what we do, the way that we do it is to help you get the best rate possible. So measures of home buyer activity, such as online searches. So this is one of the nice things about Redfin. They have access to data that you can't get from an MLS. Online searches, requests for tours, and agents help. So on Redfin, obviously they can track all the data about, how many people are going to properties, going back to the properties multiple times. Requests for tours, simple metric in their system, and agents help. So you can request an agent's help. Hey, I need an agent's help. I need to ask an agent a question. You can do that in there. They're tracking all of that to give us the data. And mortgage applications rose as rates fell below 5%, which they did. The average rate in the United States fell below 5%. 4.99% is the average rate. That was last week. New data this week comes on Thursday for the previous week. So we'll see if that holds. I think it'll be pretty close. If it is above 5, it might be like 5.01, or it could be 4.97. There's also a lot of people who've been asking about paying points lately, which is an interesting dichotomy. From the last couple of years, a lot of people talking about paying points. I do not recommend paying points. That's not. It may make sense on a very small scale in certain circumstances, but for the most part, I think right now we're in a higher cycle of rates, and we will see. I think it's likely we'll see rates drop in the next year or two, maybe 3, but probably sooner than that. 1 or 2 years, I think, is a very safe window. And so your break even on paying points is most likely going to be beyond 2 years. A lot of times it's 4 years, 5 years, 6 years to break even. And I don't think that's a smart bet to make right now. So hopefully that helps. I would go and look at comments and stuff like that. I'm sorry I can't do that right now, because if I do, it's going to give you this crazy screen. But here's the bottom line. We actually, you know what? I am going to do it this way. Sorry for the crazy screen for a second. If you want to make sure you're getting the best deal, if you are pre-approved or you have a buyer who's pre-approved, and you want to say, hey, are they getting a good deal? You have someone who's out there looking, expecting to pay a 5% or 5.5%, and you can tell them you can get them a 4.5%. That is going to be a difference maker for them in the way that they go about it. What they're pre-approved for will increase. So make sure people are getting a good deal on their home loans right now. Call me, text me, shoot me an email. I will be here to help. I am optimistic about the future, but we do have some valleys to get through here. We are at risk. The market is more fragile than it has been. We want to see mortgage bonds strong. We want to see rates low. Those are things that will help us get through this. Another thing that's helping us get through this is very high rents. I have had a lot of landlords who've been watching this channel, who've been reaching out to me saying, you're right, I'm undercharging for rent. I'm going to fix that. And I'm not trying to screw over tenants. I'm just telling you, so many landlords are underpricing their homes for rent by huge amounts, especially in San Diego and probably all of Southern California, but especially in San Diego. So higher rents, which are going to continue to cascade higher, coupled with Lower rates and more inventory should be the perfect recipe for a lot of real estate activity, but that may come in a few months. So if you're in the industry, we've got a storm to weather here. It may look bleak. You need to look at ways that you can provide value to people in your sphere, on YouTube, on Instagram, whatever, providing value, providing updates, providing information, cut through the crap. There's so much crap out there. So bad. It's so bad. So much bad information. And listen, if someone, you just always have to look at what is the reason for what you're seeing. Why would it be the case that someone would say, hey, I should buy a house or I shouldn't buy a house? Be well aware. I am in lending. It's bullish. I'm a real estate long-term bull. That's one of the reasons why I'm in real estate lending. Because I believe in real estate. So it makes sense. The thing you believe in the most, that's what you should be selling, isn't it? And if you look at the chart, you would have to believe it too, because it doesn't lie. Real estate values go up and to the right. That's what they've always done. That's what they'll always do. But there are peaks and valleys. And right now we're into a valley. Sellers, listen to your realtor. Number one piece of advice, listen to your realtor. Got to listen to them. Okay. Right now, more than ever, you are counting on them to help you make the right decision. If you don't listen to them, then you cannot blame them for what happens. Okay. Let's be fair. If you don't like the results you're getting, ask yourself this question first. Did I actually do what my agent said I should do? Or did I say, you know what, I want to do it this way? And they kind of have to go along with it, because at the end of the day, they are trying to serve you, which means they want your wishes to be fulfilled. But when it comes to how you're pricing your home, how you're marketing your home, how you're staging your home, you've got to listen to them here. It's the whole reason that you're paying them. Okay. You want their advice. You want it to be solid. Listen to your agents out there, team. And buyers, have a field day. Okay. In this market, buyers, right now, you can go have your cake and eat it too. I'll be there to help eat it with you. Have a tremendous day, guys. And I will see y'all again soon. Take care.